waves, shortening of the thrust once again to the upside. On Euro futures, contract 6E, on a 60-minute time frame. But what's of interest here is wave J. It's the largest upwave, or very close to being the largest upwave, yet makes the least progress to the upside. As we can see, this is how much distance, this is how much progress was made between the swing highs. At the same time, the sellers are increasing their wavelength, as we can see from here to here to here to here. It must be noted that wave J achieves nothing. With all this effort, it takes effort to drive the market up. We've got good, strong price action here. Yet, with all this buying, we only net this much to the upside. So what does it achieve? It actually achieves nothing, which ends in negativity on this bar. Very interesting behavior. From the highs of E over here, our wave J actually ends in negativity, which is an upthrust of the last swing high. Now, I'm not saying we would trade this upthrust. Why? Well, because wave J, we can see good buying. I mean, if we had volume, and we can see volume decline as we try to rally back to resistance, and we can see it's a weak rally with volume, then we may take the upthrust. However, we wouldn't take this trade from the information or from the data we have in front of us. I've jumped ahead of myself here, bear with me. So before J, we have wave H. And before wave H, we can visually see that the waves are increasing. So we can see that the selling is increasing, with H being, this wave down is our change of behavior wave. And then from down here, we can see some demand here. We dip down, we have this local level, we dip down to reverse and close further. We dip down again, we hold. Then as we try to break under, we can see there's no selling pressure. We bob back up. Where's the force that was unable to break here and break here? There isn't any selling pressure. So when we're down here and this bar breaks, we're looking for the next rally. There's nothing to do here from this change of behavior. We must wait and analyze the preceding price action, being wave J. From wave J, we have a small pullback via K. And ideally, we would like a deeper reaction. However, the preceding wave here, L, is extremely weak. The angle of ascent is the weakest on the chart, with the smallest, narrowest bars. We can see very small, narrow bars. Look at this buying, this buying, this buying, this buying, to this, after we've seen an upthrust. So this wave here, we would class as a no demand rally. And importantly, this occurs after an upthrust. And in here, we can take a trade. And as we said, we can see the small, narrow bars. And the market gives us 3 hours in here to get a trade. Don't forget, this is a 60-minute time frame. Now that we are experts in comparative analysis, how about comparing this buying to the previous down wave here? Although it's not large, we can see selling of good quality. These two spreads trump any buying in that rally. Important data. We can take this chart further by adding structure. And when we do, we receive additional data for the short plays. Now we can see that wave H is much weaker than it appears. As we decisively break this demand line here, we have 1, 2, 3, 4, 5, 6 touches. So this is a working, valid demand line. And don't forget, these are 60-minute bars, so this is of significance. And look how we break. We have a decent widespread down bar. That gives the break validity. Again, we would like to see over 50% of the break under our area of structure, which is probably why we come back to test. So let me just draw this. If we proceed, look, then this is why we come back to test here. We break, try to hold it into the supply bar, bang, instant reversal. Fascinating behavior. So wave H is our change of behavior wave. It's the largest wave we've had since this uptrend began. It breaks structure. We break this swing low here. So this wave achieves a great deal with evidence of good selling quality. As we drive up from the lows of H, creating wave J, as we break into these highs, breaking this swing high, we can draw this solid demand line with 1, 2, 3, 4, 5 touches. So this is a valid demand line. Then from the highs here, we come back down, and via M wave, what do we see? We break on this bar with conviction. Over 50% of the spread closes under our area of structure. This gives the move validity. Then after this break, look at the price action. Spreads narrow at resistance. Look how we hold here, 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 and here. How many times does this market have to hold here before we short? This is weak buying. That is bumping its head at resistance. The flip side use of this demand line with 5 touches. And we break with conviction on this bar. So that gives another valid touch if you remember session 1. So we have the market holding here, bumping its head against resistance with weak, narrow spreads. After this good selling. Before that, a no demand rally into an upthrust. Before this, we had a change of behavior wave, breaking structure, breaking swing lows. Now, by piecing the elements together, this area here is a must buy. I hope you can see this. It's a lovely gift from the market. 60-minute time frame, 4 hours worth of trading in there. We drill down to smaller time frames. I'm sure there are various glaring opportunities. If not this bar, can't break, can't break, can't break, bang, sell stop the lows here or here, or as we close under this little cluster. Various opportunities to jump on board. We are short from here, or we add additional contracts here, or we make our first play here, either or. Which is our first obstacle? Yes, correct. We need to break this low. This is our change of behavior wave, and this is the swing low. So if we can break this area of structure, we have a good trade on our hands. And lo and behold, boom. Look at this bar. Widespread down bar. Over 50% of the spread closing under area of structure. We come back to test here. 2-bar top reversal at resistance. Beautiful. Another trade we could take. Add additional contracts. A momentum play. We're trading with the flow here. This study was purposely picked as it is more complex and taxing to unravel the forces of demand and supply. We do not get instant gratification via our change of behavior wave, our weak rally. And this is the main point I'm trying to convey. There is no instant weak rally. This is our change of behavior wave. Break in structure, break in structure. If we would draw this level in. And ideally, we'd want to see a weak rally into our first area of structure. And we would want to short here, come up, and then bang, we're playing for another leg down. Yet, the rally to J unfolds. Okay, and this occurs many times. Many times the market will come back up to test the previous high, which is fine. This is natural market behavior. This doesn't neglect the power of wave H. We still need to be able to study the forces of demand and supply and let them unravel. Okay, there is no instant gratification here. However, as price does continue to unfold, we can see that the demand force is tiring. As in here, there is no ability to rally, and the sellers are emerging, as we can see here, and they're growing in force as seen by the waves. So the key is the change behavior wave, breaking the demand line and this swing low. Also, this weak rally into this area, which was an upthrust. So wave H confirms the presence of supply. Good move down, breaking structure. Whereas wave L disconfirms the presence of demand. Can you see how we're slowly piecing this together? And how powerful this form of wave trading truly is? Good. I see no questions. On to the next study.